It's Scorpio, yeah. Scorpio sex mad.
Hey, Dan.
Hello.
Hold on just a second.
It's Scorpio, yeah. Scorpio sex mad. Hey, Dan.
Hello.
Hold on just a second.
Hello everyone, welcome to Trading Plan Saturdays with Brian Beamish, CRInvestor, and Landon LowPro here on Saturday. Where are we here? Oh boy, let's see what the heck I've done here. I've loaded the music score by accident. I apologize for that. Again. As you can see, I've tried to... now I got to take your mute off. I don't know what I'm doing here, Landon. I'm trying my best here. As you can see tonight, everyone, I tried to introduce a new music score and video. I probably totally messed that up, but hey, I suppose a few shows into it, I'll get it all straight. So it'll be funny to watch the video afterward. But anyway, welcome, welcome. As I said, this is our Trading Plan show. Hello, Landon. How are you tonight?
Oh, sorry.
No, it's all you can do is laugh, eh? Not bad, huh? Well, hey, you gotta give a guy credit for trying, right?
No. Oh, I'm doing great. I'm doing great.
Yeah, that's the
Busy
funny
daily
thing.
laugh lately, but yeah, I mean, haven't been doing as much trading lately, but just getting a few shots in here every once in a while. So.
Yeah. Okay. Well, that's good to hear. As you guys said, or as you guys saw, I've introduced something new tonight, trying to do these intro pieces, and this is baby steps, so bear with me here. I know it's rather comical. So I guess the first part of these shows, I like to take some time and just talk about what's been in the news, what's been happening of late in Bitcoin land. And specifically with our trading, I'm sure you're all well aware we're heading into a seasonal questionable period here, so there's probably lots to talk about that. We are very fortunate tonight. I think I'm going to have to put another person on mute here. Sorry about that, Zen. We are very fortunate tonight here to have Dan Verasani in the lounge with us. He's going to talk a little bit about his trading psychology too. So lots of treats, and of course, after I'm done my little spiel about my experiences and ideas about trading and trading plans, we'll have Landon's presentation. And as he said, maybe he's a little quieter of late, but actually I think he even has a trade to tell us about that he might be in right at the moment. So really excited about tonight's show. Dan, if you're out there, I wouldn't mind just getting a shout out to you. You with us, buddy?
I'm here.
Okay. Good evening, sir. It was a really interesting conversation we had this afternoon on the U.S. dollar and the Japanese yen, and some prognostications about that. So I really enjoyed that conversation. Thank you very much for the invite.
Thank you. My pleasure.
Yeah, and well, I don't really need to get too much into specific trade ideas. What I'd really love to hear from you tonight, and the reason why I invited you, is I would love to hear just a little bit about your thoughts on trading psychology, how you feel when you're in trades, how you feel when trades go against you, and how those trades sort of sit with, the individual trades sit within sort of your broader framework as an investor. So thanks again for joining us. I suppose we ought to give a shout out to our resident bad boy, Andre. How are you tonight, sir?
Hey guys, I'm good, thanks. Looking forward to listening to what you guys are going to talk about.
Cool, thank you very much. Great to see you. And what I find really interesting is I was chit-chatting with the boys this evening before the show, and I had put on my screen. Let's see if I can show you what I'm looking at here on the Bitcoin. I had this little long setup working that I've been posting about all day, and my targets were up in this area, and I found it very amusing that both Landon and Andre were actually thinking about taking the other direction. So very fascinating to be part of this whole experience. So I'd love to hear Andre's thoughts, of course, on trading psychology too as we go along. I do see we have another participant in the room, Zin. Feel free to say hello if you have a moment. And, I don't know, can we get an audio on Zin? Are you out there, buddy? I see that you're on a laptop, so that's fine. Good to have you in the lounge. If you feel like typing in a question, that's cool. So Landon, maybe you can start us off just by telling us a little bit about your thoughts over the past week, how you've been feeling, how have been trades going, how have they been treating you, and what's sort of your psychology of late? How are you feeling these days?
Oh, well, yeah, as you guys know, I've been a little too busy lately to trade. I've had a big project going on, ton of stuff at work, and it's been exhausting. But I've been able to get in. I've still been keeping up with my main chart here and there, and updating everything. In fact, here, let me put my screen share on. Right. Here we go. And just slowly been keeping everything apprised, updated, seeing how it's going, and what I've been doing is is basically getting in really small positions, not really seeing them all the way through. As you see, I've got it mapped out on the 4 hours, so it's a little bit longer time frame. So usually what I'll do is get in, hold the position for a short amount of time, and get out with some profit. That's pretty much all I've been able to do really throughout the week, is just hold 2 or 3 positions, stick to a nice little payday, and bail because I don't have any more time. But currently, along with Flipper, either selling or shorting up in this range, and yeah, probably looking for me another return down to probably around the 440 level at least before getting back in. So I think in general this looks really strong for the long term. Midterm, we're still not broken out of the long-term trend, so I'm still going to treat it as a bear market until that changes.
So I, just from someone who, as a broker dealing with clients over the years, what I found really fascinating was when people really force trading, and when they were like, "Oh, I got to make money to, to pay the bills and those kind of things," their trading was just horrible. So I really find it interesting, and I think it's a great anecdote on someone who sort of approaches this professionally, is that you're putting trading into perspective right now. You're pretty busy on the work front, so you're just I would assume that you're sort of cutting back a bit on the activity in the Bitcoin.
I am, and I've not really seen a drop in any profits on a consistent basis. In fact, I mean, really, I haven't seen. I mean, I've been consistently making about the same profits that I was. The only difference is I'm a little less stressed on the trading side and a little more stressed at the work side. I guess that moved over, but I guess it just goes to show you that you don't have to babysit your trades. So.
Well, and that's I think I heard you earlier say that you basically had targets in mind. Did you have open orders just working at those targets?
I would put in I'd check it periodically just to see where it was at, and then I would put a target. relatively close. I don't like say we're at 420. I don't like just throwing a sell order way out at 460. I usually check on it every once in a while, and when it gets within about a $5 range of where I'm looking to trade in, I'll recheck, double check everything, check the 15-minute, the 1 hour, the 4 hour, and then put that order in, and then go back about to my business. I'd love to trade a little more lately, but yeah.
I'm
Stop with that.
interested. I sorry to cut you off there, Chief. Well, we have Dan here. I'd love to hear his thoughts. So, Dan, tell us what kind of strategy do you favor? Do you like the set it and forget it sort of strategy, or do you like to babysit your trades?
Well, I wouldn't just set it and forget it. It depends really on circumstance of setup, and also whether my plan for the trade would be a longer term swing trade or a shorter term swing trade. And the difference between long and short, as far as I'm concerned, long term would be at least lasting likely to be few weeks to maybe longer. And a shorter term for me would be something that might last for a few days. I'm
Right.
certainly,
And
I'm
I
not,
guess what I'm asking is, on those, when we were talking about the Japanese yen trade, I just have found that it's in my best interest to come up with levels. I personally like the idea of selling someone a position doubles, those kind of things. And if you can get into those situations, do you find it easier just to let an open order work at those levels? Or do you think it's just generally not a good idea to have sort of those resting orders working?
well, first of all, trading something like the Japanese yen, I would be looking for a very long-term trade.
Yeah,
And
yeah.
for that, it would be very difficult to pick it up at an absolute top. And I wouldn't trade using that either as a futures contract or contract for difference. I would only handle that using option trade.
Mm-hmm.
And for option trade, I would be looking for far out of the money and with a long-term time contract. So if I think the trade is going to take me 6 months, I'll go for 12 months or so, or maybe even longer contract to make sure that I don't run out of time. And for that, usually the spread between buy and sell of the options are quite wide, relatively wide. So what I would do in that case is to scatter some contract. I would work out what I think is a reasonable price, and then I would scatter positions which would, if they all triggered, I would get a fully loaded, and if not, then hopefully I'll get some filled in, and others I might then buy at market.
Mm-hmm.
If, for example, during that time, I will also be looking at how the price pattern is unfolding, and if it is beginning to convince me that it is moving in the way that I was expecting, then I would bite the bullet in terms of buying the option contract at price, at a market price, um, and then just let it work. That I would not worry. I would not have any stops on those, because the idea would be is once you bought that particular option contract, as far as I'm concerned, that money is gone. It's never going to come back. So that's the view I take. So I do not then put any stops on it. If, however, I find that it's not working in my favor, and there is a possibility of salvaging some, then manually I would exit. But
Mm-hmm.
otherwise, I would not have a stop on those contracts.
Options are funny creatures, so they're very apples and oranges-y compared to trading something like Bitcoin. So I certainly don't want to confuse our broader audience for those that maybe haven't looked at options before, but they're very tricky, and I would highly recommend that you work with an advisor if you are considering trading options. And actually, Dan, this dovetails nicely into what I really want to get out of your brain is you know, what my interaction with you is, I find you personally a very professional demeanor and perspective, and you know, this is all about trading plans, and really what that comes down to is one word, and that is risk. And so the question I have for you, and this is basically what I'm salivating over because I really want to hear how you think. But how much risk do you think is appropriate given any one particular trade and your overall portfolio? Do you understand what my question is?
Yeah, first of all, I find that particular question a little bit difficult simply from the point of view that many of the participants here in the show and also in the Bitcoin chat are traders of cryptocurrencies. Uh, and primary one may be Bitcoin, and others will trade Litecoin and many other that I don't even know or can't even pronounce the name. But basically, I class them all as a cryptocurrencies. Now, the cryptocurrency, as far as I'm concerned, is single instrument because they are very closely correlated with small margin of variance. So even if I start talking about what is a maximum a position size or a risk I would take in terms of my trading account, if I was to say 1% or 2%, it really wouldn't be relevant simply because one could turn around and say, okay, I've got 1% on Bitcoin, I've got 1% on Litecoin, I've got 1% on some other coins, and before you know, you've got 5 or 6% all in very closely correlated instruments. So if I was talking about the trade, my average outlook would be is that I would not risk more than 2%. I would really venture out if I'm really convinced. I'll probably be 2.5 to 3% maximum. But then that wouldn't be across all the instruments which are so closely correlated. So I would
Well,
pick.
that's you know, when I hear that, that's basically music to my ears. And I understand your point, and really, you know, we can take a couple minutes and talk specifically about this. As a broker, I used to, and I love the joke. It's just great. I used to have what are called gold bugs as clients. And of course they love gold, right? And everything's a conspiracy, and gold will ultimately go to the moon.
Yeah.
And the favorite cliche is, of course, as a financial advisor, you know, asset diversification is super important. And what Dan basically is saying here is that, you know, you could have all your money tied up in one asset class. You think that you're diversified because you have a whole bunch of different names, but really you're basically taking just one risk. And the classic cliche that I used to tell people is I'd have clients that say, are you diversified? And they say, oh yeah, I'm diversified. I'm long both gold and silver. So I might not have told the joke correctly, but I fully understand what you're saying there, Dan, and I would drive it home to our participating audience out in YouTube land and in the lounge that, you know, yeah, you can have and what's the textbook term for it, Dan? When you have a whole, I guess, what was the term you used? Correlating assets.
Yeah, the idea would be is to have different assets which are not directly correlated.
Yeah.
Or have a very little correlation.
Now, so I guess the way I would look at it is, you know, if I was just coming at it from a financial planning perspective, you know, maybe 5–10% of your portfolio, you know, into the sort of commodity space, if you will, of which, you know, a chunk of that could be your Bitcoin exposure. You know, for those that are trading out there, I guess the question I have for you, Dan, and it's sort of getting back, I'm trying to re-ask the same question, I apologize, but here I'll try again. I like the idea that if somebody's going to come and to the market and speculate, that they don't take too much risk of sort of their stake or what it is they have to work with on any one trade. And my sort of general philosophy is, don't let any position go against you more than 5%. Did I hear you correctly when you actually would like that to be around 2%?
No, when I say 2% or 2.5% is, for example, when you're working out your position size, and let's assume for an easy calculation that you have $100 account, and that means if you're only looking to risk maximum of 2%, it's not the actual trade being the 2% size. It is the actual risk if you were to get stopped out.
Correct. Yeah, exactly. So, if anything, you might even be able to risk 5-10% of your, stake.
Correct.
But if that breaches that 2.5% that of loss of the overall portfolio value or that overall stake, that's sort of your uncle point.
Yes, that's it.
That's good.
And in some cases, if I find that my position size is rather too big, I would scale the position size down.
Mm-hmm.
And on other occasions, if I think my stop is going to be too far away, then either I would ignore the trade or I've only put half a position.
Okay, that makes sense.
Boy,
And
you
then
guys would hate my how much I move back and forth.
Well, I think from, and thank you very much for those thoughts, Dan. Keep in mind, Landon, that from the conversations that I've had with you, I've heard you say that, while you may throw a big chunk of your net worth at any one trade, the actual risk or sort of your potential realized loss wouldn't represent more than that, say, 5%. Is that correct?
For the most part, I mean, sometimes it gets out of hand so quickly just because of all the leverage that I move. Sometimes it'll run that 5%, but
so as your financial advisor, you do understand that I would not be happy with that.
Oh yeah, definitely.
And just for the record, everybody out in YouTube land, I'm a retired advisor. I'm not licensed right at the moment. This is all for educational purposes, and I'd highly recommend that you talk to your financial advisor before doing anything. We just have to say that to cover our butts, right? But the long and short of it here is, I've actually written, for those that have never watched before, I have written a course and it's interesting. I really love this this sort of what am I trying to say here? The Trading View community, because I actually had somebody that went through and he said that he actually thought that he might be able to help me with editing. And I'm a terrible editor. I'm not that great. But I wrote this course a while ago because a lady from a continuing education company asked me to. And I'm sort of in the process of producing it. And this is a testament to basically my 20 years working in the financial services industry. And, I basically have two rules that I really want people to follow when I was a broker. As someone that, has basically lived through the crash of '87, I was chatting with Dan about that today. I got my first job in the brokerage business in '88, right after the meltdown, which is kind of ironic. But there was a mini crash in '91. Then of course we had the meltdown in 2000, and then 9/11. I've been through situations, and along the way, I've seen countless sector rotations. The dot-com explosion, both to the upside and the downside. So I've seen all of these markets before. I have seen this Bitcoin story before. This really isn't anything new. So the question really becomes, longevity. And what really scares me about some market participants is they just don't understand that bad can get really bad. And one trade can literally wipe you out, especially if you keep averaging down, trying to believe, say that, well, I'm just going to, keep throwing money at this and eventually the market will turn. I've seen situations where the market just does not turn. And really what we're talking about here with trading plans and trading psychology is that, we want to be that 5-10% that succeeds at this game. Keep in mind the market is designed to take away most of the money from as many people most of the time as possible. That's the way the market is designed. So, these are sort of words of advice simply based on years and years of experience at this game. And, when you listen to Dan, what I hear a professional fund manager. I mean, he just talks nice and matter of fact. He knows specifically what the numbers are. We are sort of chit-chatting a little bit there about option strategies, and of course he has specific entry criteria. And he could probably recite all this stuff in his sleep. And so it's a real privilege to listen to you talk to us, Dan. Thank you very much for popping in. And by all means, if you have thoughts and you'd like to add to anything that any of us have to say, please feel free. So I think what I'm going to do now, it's 5:30, is again I'm working with, it was suggested to me recently that I do little breakers through the show. So this is specifically our pause, and when the pause is over, we'll be on to the next segment. So thank you very much, and great thoughts, everybody. All right, welcome back, everybody. And I fully understand if you're looking at this and laughing, but I'm trying to teach myself this stuff, and I'll get it. But let's move on now to our next segment of the show. Sadly, through these presentations, we can sit and chit-chat about anecdotal stories for hours on end, and what ends up happening is this show's 3.5 hours long. So I really want to try and keep us on cue. We're at about 20 to 6 now Pacific time, so I think we're doing well. I'm just going to, in fact, my segment, I don't know how long my segment's going to be tonight. I sort of slipped into my segment a moment ago, and I stopped myself because I remember I have to really work on adding these pauses into the shows. But my segment, I like to take a little bit of time, talk about risk-to-reward ratio strategies. Basically, as I said just a moment ago, what I hear from Dan Virasani's very professional approach. All of his trades probably all fit sort of the same criteria. And interestingly enough, that in itself actually makes you a better trader. Because what ends up happening is the trade process becomes more sort of riding a bike rather than reacting. When you, for example, like when you fall off the bike, that's a reactionary measure. I saw actually a seminar recently where somebody talked about how trading actually puts us psychologically in jeopardy. And so what ends up happening is that the emotional part of our brain reacts, because when we're in sort of crisis or in that panic phase, panic mode, that part of our brain takes over. So it's really fascinating, and you wonder why you make silly mistakes, and you make the mistakes over and over. And with panic, Andre loves to talk about panic buying and panic selling. Me and my stupid conditions. It's not. it's not uncommon for us humans to act human. We're supposed to act human, and when we see price move, literally that affects our dollar, our bottom line, and that elicits usually an emotional response, usually panic and fear. And unfortunately, when we get in those situations, we don't always act logically. So, a long-winded way of what I'm trying to say here is I like to hear what Dan had to say, and the demeanor, the matter-of-factness of how he said it. That's what I really liked.
Could I just add a comment to that?
Sure, by all means, sir. Can I
Can
kiss your butt a little bit more, please? Just kidding.
One of the thing I find is that price is so important if somebody is trading very short-term trades, so intraday swings. Some of them trying to scalp for maybe for $10, that kind of thing on a Bitcoin.
Sure is.
Then every cent count in that, and I find I cannot cope with that myself. I'm rather slow at picking things up, and then I say to myself, if I need a confirmation. So the confirmation, that might be 1 or 2 or 3 minute bar or a 5 minute bar. It might take half the move already that I'm expecting.
Yeah.
If I wait for the close of the bar. If I don't wait for the close of the bar, then I often get caught the wrong way. So, I tend to trade larger swings, and for that, whilst every dollar counts, but it's less relevant, because if you're after $100 and you missed first $3 or $4 or $5 move, it's not end of the world. But if you're only trying to scout for $10, then $5 move is like 50% of your trade already gone.
Yeah. Well, and so, again, this attests to the idea of having a trading plan. And if your plan says that, look, my trade has to give me at least a 2-to-1 risk reward, then you being sloppy on your specific entries, if you can't lock in that potential 2-to-1, and trust me, as a veteran in the market, there's lots of time. We call it one simple word on the Chicago floor. They call it FOMO, fear of missing out, where you see price spike and you're like, oh my god, oh my god, oh my god. You chase it, and then you actually look at the risk reward models, and a lot of the times you might actually have by the price that you actually paid, you might have built in a trade where your reward, your potential reward, even if the market goes to your target, your reward is less than the amount of risk by definition you want to take. Let's say you're trading a price formation. So I completely understand, Dan. Maybe that's a function of us getting older, but me too. I guess the way I look at it, and really, I don't know whether you're a fan of John Murphy, but he's a trend follower, an older gentleman, and he would often muse on CNBC and things like that. That hey, I'd rather be slow and have lots of confirmation. It's nice and easy to have like if you're using a daily chart or a weekly chart, to have like a full day to think something over. Versus having to react off a 2-minute candle. So I'm right there with you, buddy. I totally empathize. I hear Landon really wants to say something here, so go for it, buddy.
Oh, no. I just thought it was funny. It seems like we're picking on Flipper for this week.
It's everything I do.
Well, with regard to that, there are those that have a certain gift, and that gift is to be able to act very swiftly on what they call sort of intuitive trading. If you can get to that level of intuitive trading, then I don't mind so much you really playing the market, but to be perfectly frank, there's not very many people I've met in my life that are there. So, we have we're actually very privileged to be working with Andre, because, he is I mean, let's face it, he's taken some huge losses, and I think the whole community knows that. And they're not. The sad part about it is nothing to do with his trading acumen, and the irony of it all is that's a function of risk, because we're playing in unregulated markets. That's just the way life is. We all understand that when we're signing up to play this Bitcoin game. But just even in the face of that horrendous loss, to see the way he acts very coolly and calmly. I mean, frankly, like I said, I've seen a lot of traders in my life, and there's very few people I've met that are like Andre. So he's a special case scenario.
Well, I mean, I would say, the way Flipper and I trade, it does take a little bit of leap of faith, I guess you could put it in that sense, but really, I think, and Flipper will have to add his 2 cents to it, but a lot of it's really more about just pulling away the emotion, and also just trusting yourself, similar to how you do with the setups, but just on the shorter time frame, and knowing that, okay, well, it's I obviously didn't have the obviously was too short or too long on whatever particular short-term target that you were looking at, and then that's the thing with short-term targets. I mean, if you were even remotely close to being right, you're going to have an opportunity to get back out and break even, even if you aren't out. Now, if you weren't remotely close to being right, well, then there was a problem ahead of time. But that's usually why it takes, I would think, both believing in yourself and knowing the battlefield ahead of getting into that quick, moment-to-moment trade. Say, like, for instance, I'm sitting there, I'm looking at the chart, and I see, it's been, I wouldn't use ranging at a $10 to $20 range for the past day, and the price plummets a good $15, $20. Well, and within a matter of moments, I'm going to be buying that relatively quickly, just because I know there's going to be usually some recoil to that, especially if there's no other longer-term indication that it would, run past the other moments. So that's kind of where that is. It's more of a.
You know what I like, and I hear what you're saying, Landon. What I like, and hopefully you guys, and keep in mind, Landon, too, that these videos are watched by quite a few people.
Mm-hmm.
So, and I would imagine, and frankly, I've been told that there's quite a few people that watch these videos that really have never been in this trading world before, and maybe they're watching them because they're they got some coins through mining endeavor, and now they're new to trading. Now, I guess the point that I was going to make earlier, and as someone who comes sort of from the financial planning perspective and brokerage world in Canada, we take this whole concept of fiduciary responsibility seriously.
Mm-hmm.
And when I was an advisor, the risks that I would see people take would just be silly. And really, the sad part about it is that they didn't have to take the risk to begin with. If they just use some common sense, they keep themselves out of trouble. Now, I mean, just hear where I'm going with this, Landon. And don't stress. I'll give you your moment. The point that I would make is that when I talk to Andre, he has now repeatedly told me, and basically this is music to my ears, that I want 3 reasons to take a trade. And almost every single trade that he does, he goes, look, here's Willy, here's momentum, and here's some other reason. And almost every single trade that he shows me, it's 3 reasons. I would love for our sort of noob audience, and we hate to use that word, but basically new to the Bitcoin world, that you might articulate articulate that statement that you made just a moment ago about, price drops, $15, $20, it's in a range, I'll take that trade. Because I think if we dissected sort of what's going on in your brain, we could probably find those 3 rules.
Mm-hmm.
And as I've sort of pointed out through my course material, and I'll just make a little plug for it here, anybody who's watching on YouTube, you're more than welcome to go and take this material. Basically, it's introduction to how capital markets work and building an investment plan. I'll even post it on the YouTube site just so that it's there. Let's go ahead and do that now. The point here is that, a huge stumbling block a lot of new people make to this whole investing process is that they don't have a plan. They don't look at the trade logically. As I just said a moment ago, what I hear from Andre continuously is, here are my 3 reasons. And, of course, I heard he showed me a chart earlier today, and I almost fell over because it was like literally hearing myself talk. I mean, it's beautiful. He's actually putting the stuff that I try and espouse and that I've learned over the years, he's putting it into practice, and it's just poetry in motion. And I hear Dan just a few minutes ago just basically lay out verbally his trading plan. I mean, it's beautiful to listen to. And I know you fight me tooth and nail, but I could pretty much hear your trading plan, and I'd love to be able to use you, Landon, as sort of a guinea pig and put your trading plan down on paper, because I believe it's actually a pretty good plan that you have. And it doesn't surprise me that you and Andre are doing very similar trades, because usually the trades that Andre and you are looking at, there are 3 or 4 very good technical reasons why you should be doing the trade. So, okay, now I'll be quiet now. I want to hear what's on your mind. Go.
Oh, no. I agree with you. In fact, I've got about 4 or 5 that I use for a confirmation, and then add that in with I'll work with a, say like a trading view chart. I like working with the 1 hour and the 4 hour, the longer term ranges. And then I'll trade in between. Obviously, you're looking at a longer time frame if you're working with those kind of charts. But I'll use that kind of as a framework for basically knowing what kind of market I'm in at any one time.
And we call that just identifying market structure.
Mm-hmm. Yeah.
So, for those people that are just listening out on YouTube, really what we want to do ideally is we want to try and take trades where the higher time frames agree with our trade idea, and that's just a simple concept. Are we going to try and sail into the wind, or are we going to try and sail downwind? Obviously, sailing downwind is a lot easier, and what I found personally is that trades with the trend often produce positive results easier. Is that a good word to use? Than trades that go against the primary trend. Would you agree with that, Landon?
Yeah, definitely. And it's why I like sticking in that long-term range, and then just simply covering in between. So basically, average. I'll have a position that'll, let's say, last for a day or 2, but I will cover, say, within my plan. Say if it gets oversold on a shorter time frame, I'll cover that position on a small chunk of the amount, and then rebuy in at a lower position, not really caring too much about, a lot with that spread, just kind of pushing and patting down that average price of whatever short or long position I'm in, getting towards my inevitable target to change sides and take the other aisle. And I'll use MACD and Willy and RSI all as confirmations, along with support and resistance lines, and I like at least 4 for me to basically close my position and get out, and I'm done. And
So
then
4 reasons.
yeah, and at 3 on the
I want
indicator
5.
side.
Do I hear 6? Somebody's got to give me 7. Come on, let's bid this thing up, baby.
No. I mean, seriously. And me and Flipper have talked about this. You know, you go and look at RSI and Willy on the 4-hour, and it's just, well, it's, you know, it's like child's play looking looking at that thing and just knowing when to get in and get out, and you know, it's.
Well, a word of caution that I actually have been hearing a little bit lately, and it's just a bit of concern for me, and again, this is sort of speaking as somebody who's been doing this a while.
Mm-hmm.
We can fall into a little bit of a trap if we rely on multiple momentum indicators to be that confirmation. You could put a stochastic study, a MACD, an RSI, a Williams percentage R, have all of them line up to tell you to take a trade, and you can sit there and say, well, I've got 7 different indicators that are all different indicators that are all giving me a signal, i.e. I have 7 different confirmations. That is a little bit of a trap, so we just have to be cognizant of that they are all measurements of momentum. And my advice for those out there is try and blend momentum with maybe some volume analysis with some price analysis in itself. Just a word of caution from somebody who's a jaded skeptic, all right? So that's just my 2 cents on that.
Oh yeah, definitely.
So, Dan, I'd be curious to hear from you, sir. How many reasons do you need to have to take a trade? And do they come from different schools, or are they all sort of part of just one sort of school of thought?
Well, in terms of number of reasons, my primary analysis is not so much from the indicators, but it's on my understanding and interpreting the price action as it fits the Elliott wave theory. So many times, whilst I cannot predict exactly how the price is going to progress, either to the downside or upside, but when I see a pattern and it fits my Elliott wave understanding, then I am reasonably sure, and under that situation, I would have, for example, some sort of a trend line that guides me along the particular cycle. I would have some Fibonacci levels, which would be either retracement or projection or extension. And RSI, I only use it not so much as an oversold, overbought indicator. I would use RSI to help me define the trend. So I often put trend lines on the RSI. And, you know, I need my Elliott wave and my trend line and fibs at least to line up in the zone that I'm looking for. Once I've got that zone, then I would drum down to slightly smaller time frame and see evidence of price action unfolding in the way that I want. So if not so much like I need so many different confirmation, I have a zone in mind where I think I want to see an evidence of price doing what I want.
Mm-hmm.
That's where I would be then planning to open up a trade, and sometimes I'm a little bit too early. For example, in the earlier part of the day, one of the character that I call or I feel is an insulting character tried to pick on me for some reason, either because he feels threatened by my analysis or he is envious of my analysis. I can't work out which one it is.
Well, keep in mind, Dan, that the market and money brings out the worst in people.
Yes, that's
true.
So
you know, just take it with a grain of salt.
Sure. No. I'm just commenting that possibly he may well be carrying some pain. So I understand, but the point I'm making is that he posted one of my charts on foreign currency, for example, Aussie dollar. Which I posted almost a month ago, but I used my weekly chart, not 5-minute chart. I used a weekly chart to identify where I was looking for a potential top to form in $0 for trading a swing trade to the downside. So I'm a month early, and I have actually attempted to short that, and I have on both occasions come out with a scratch trade with nothing really to speak about. But I'm now in short on Aussie, and I think this is going to work, and this might be a real trade. So sometimes, because I work out a zone and I don't have an exact level, occasionally I am a little bit too early, and I make sure that when I'm too early, I don't saddle up fully, or I don't get fully loaded. That if I'm wrong, I don't suffer very much. When I, each time if I'm wrong, I begin to reanalyze that particular area to see whether my main fundamental analysis is wrong. When I say fundamental, I don't mean fundamental from financial standpoint, but from my technical analysis standpoint. If it is wrong, then I have to dismiss it. But if it's right, then I will continue to observe what's happening and attempt for another trade. And
So,
there have been times when
think-
I've taken 2 or 3 trades, and if first 1 or 2 often becomes a scratch trade or very minor win.
So I'm hearing a few things here. So, and unfortunately, this game of trading that we play, it has many, many moving parts.
Correct.
And hubris, unfortunately, plays a big part in this game as well. And what we have to understand, I suppose, as traders, if that's what we fancy ourselves, is number one, nobody's 100% right. I mean, it just doesn't happen. So what you need to then do is you have to have trade management strategies built into your trading plan so that you can take 2 or 3 swings of the bat at any one particular idea. So again, sir, you're just reconfirming your sort of professionalism at your approach, and it's music to my ears, and it should be to the broader audience. And I think the simple message is, if I'm hearing you correctly, your trading plan, and this is the great part about trading, is that no 2 traders are exactly alike. Everybody will come to their own ultimate decision as to what their reasons are for getting into a trade. And so if I heard Dan correctly, basically he said, look, I'm a levels kind of guy. I want to see the market trade to certain levels. Once it gets to those levels, then I'll study price action a little bit closer. So, you have all seen this document that I keep touting, and it's in this course, and I'd encourage you to go to it. And it looks like somebody's on the course right now, so that's good to see. But every single trader should have, at least 3 reasons, and these reasons you should be able to basically recite in your sleep. But 3 reasons why you should take a trade. I love the fact that Andre's just bought into that lock, stock, and barrel, and every single time I hear him talk, here are my 3 reasons. Boom, boom, boom. I mean, it's beautiful. But what I just heard from Dan was, my reasons are I'm a levels guy. I happen to like one school of technical analysis known as Elliott wave theory, and there's lots of Elliott wavers out there, so he certainly isn't alone. It's not going to be right 100% of the time, but my trade management rules quite often just give me into scratch situations. And they say the second best trade is a scratch trade, right? So, what I'm hearing from Dan, again, very professional. Hopefully you out there in the YouTube audience will appreciate what you're hearing. This is basically words of wisdom. And, unfortunately, me as a personal investor, I heard all this stuff years ago. It took a long time for me to actually get to the point of actually putting it into practice. And it might take you several times of you getting your fingers burnt for you to put this into practice. But basically what these gentlemen are saying to you today is just gold. So thank you again, Dan. I want to hear Andre's thoughts. He's awfully quiet over there. He's our balls to the walls trader. So, Andre, I want to tell me, if you would, in a nutshell, what do you do when a trade goes against you?
Oh, it depends. Depends what the what the outlook is on every time, really, doesn't it? I mean, the good thing about myself is, I'm very bull on Bitcoin. So if it goes against me and I'm holding Bitcoin, just don't worry about it, because I'm in good, I'm long anyway, and I just look for an exit, and keep and then just work it back, and it doesn't take that long, but you can work it back. You just stick at it, and you work it back, and then when it does come up, just hope you don't sell too early, and then you're in a better position anyway. So I like to think of myself as a winner all the time, and that is, if I increase dollar and have less Bitcoins, well, I'm a winner because I've increased my dollar. And if my dollar goes down but I increase my coins, well, I'm a winner because I've got more coins, so I'll be richer when it comes up. So I just lay that positive icing on it all the time.
That's, you know what? That is a little gem out there for everybody who's listening. I've heard consistently, and it's interesting too, Dan, that you mentioned this idea that maybe people out there in the trading community are living with a bit of trading pain. But I've heard consistently, over and over and over and over again, 3 letters from the boys in Chicago: PMA, positive mental attitude. I mean, keep in mind, ladies and gentlemen who are listening, Flibber here's been through the grinder. Just the fact that he has a positive mental attitude, even now, I find astounding. And in the short time that I've known him, I've never heard him have a negative attitude. He's a bit cheeky sometimes, yes, but that's a whole other conversation. But I've never heard him negative. So,
I
huh?
I have.
Uh-oh.
Oh, you stupid Bitcoin! What are you doing? What are you doing?
No, I mean
British accent.
Well, yeah, so that's just it, right? If you got a British accent.
You stupid bulls.
when I'm in the trade, I'm very much like a football watcher at the stadium. I'm cheering it on. Come on, I'm willing it in my direction. And if it turns and it goes the other way, I would just say, you know what, probably shouldn't have got into it anyway, it's too late, I better go to bed. And that's it. You come back tomorrow, you pull up the charts, and you look for the same again. You look for the same tops, you look for the same bottoms, and, repeat the process, don't you?
Yeah. Well, so the point that I just like to make is, and I apologize if I cut you off there, but I love your PMA. It's infectious, and I've heard people in the chat and in these Google Hangouts say it's infectious too. So I think that's a pearl of wisdom right there for people who are new to trading. Is I guess in a nutshell, people sometimes, get angry at the market. Why did you run my stop? Why did you just want to take my money away from me? Well, if you have a trading plan, then fine, you can fault the trading plan. Well, maybe, shorting double bottoms isn't a really good trading plan,
Yeah,
or maybe buying double tops isn't really such a good idea. Well, you can always change the trading plan, right?
If I can just add something into there, Brian, because this is really important. I've had 2 people from regular Hangouts today message me saying they shorted at 426. And 426 is like the lowest price it went to, and one was Oystein and one was somebody else. And I said, why didn't you check 4-hour Willy? Why didn't you check it? You never short when 4-hour Willy's at the bottom, and you never long when 4-hour Willy's at the top. Just a golden rule,
brother.
Yeah, it's a golden rule, that is.
And if the good Lord decided to take me today, just the fact that I hear someone say that, because keep in mind, all those that are out in the viewing audience, this little Willy indicator was a creation of mine. So just to hear somebody who I know for certain Andre's going to be a millionaire fairly shortly. So, to hear somebody like that talk about an indicator that I developed, I mean, it's staggering. It's baffling, So, like I said, if the good Lord decided to take me today, I've done my job. My son would miss me though, so I don't think that would be that's too good of an idea.
I too am a worshiper of the Willy. I'm a big fan.
This is a family-rated show, Landon. I'm just joking. I'm sorry, I didn't mean to cut you off there, Landon.
I'm sorry, Oyster, and he's just corrected me. He shorted 443. I don't mind that, but it was actually Hero Juan. It was Johnny, and he's normally pretty good, but he shorted 426. Ouch.
Yeah. Well, let's not beat him up.
Too much.
So, it's interesting that we're looking at this chart right now, right? Because I've put a box in here about, on this Williams percentage R, the Willy right now on the 4-hour. And it's interesting because the last time it got up into the stupid zone, this is the second box that I have on my screen, it took about that long for it to actually top out and break down. So we're sort of about halfway along that box right now. So
yeah, I'd give it.
That indicator in itself should be really interesting. Uh-oh, did we lose Landon?
It's his connection sometimes goes, but I would give Willy. I mean, Willy 4-hour to come down from here. I mean, could take like 3 days, 4 days.
Well, so. And like I said, this is a sort of a topping out process. There he is. He's back. You with us, Landon? He might come back. Anyway,
okay. There it is. Bad connection.
There he is. So I'm sorry, I didn't mean to cut you off. I know you were telling us how much of a fan of the Willy you were, and I was a little cheeky there with my lowbrow joke. Sorry.
The indicator. Let's make that clear.
Hey guys, can I just? I mean, is it time to show a chart? I mean, can I show a chart, or is it not time yet?
Well, what I really want, I mean, it's quarter after 6 here. So we've been on for about an hour and 12 minutes. And so the question really is, like on Saturdays, I really like to talk about trading plans. And that's sort of why I wanted to, like Dan, we're very privileged. I like to hear about his trading psychology. You notice that his very mechanical approach, and probably is why he sort of survives. Landon's approach, you're an engineer by trade, aren't you, Landon?
Oh no, not me. I'm in the transportation industry. I'm a broker.
Oh, okay. Well, that sounds pretty professional. So I do have a couple of engineers. You can hear that their approach is very mechanical. Lots of
You've gone, Brian.
Oh, I thought that was me.
No, Brian's gone.
Oh, okay.
Can you not hear me?
Oh, there you go.
Back.
All right. And keep in mind, guys, YouTube this does happen, so I apologize if I cut out. I will come back. So I'm going to set you up here, Andre. I want you're going to show us this chart, and I want you to tell us in a trading psychology, trading plan perspective, the story. All right? That's a challenge for you.
Okay, well, it's a very simple chart. I just wanted to point one thing out, really, and I'll tell you my mentality on it as well. Go with it. Can you see my screen, can you?
I can see it, yeah.
Okay, so what I've done here is I've just drawn a fib from the bottom to the top, and this is the hourly. And I've put 2 marks on this fib, the 38.2 and the 50%. And I'll start with the 50% is 440. And you can see there's a lot of action, a lot of support come in here on this 440 level, and I think just feels a bit bullish. Like the last time, it was pretty hard to push it down. So I like 50% as a retracement on this. I think 440 is a round number. It wouldn't surprise me to go down to 440 and then back up. but the main thing I really wanted to show really was let's just get rid of those. Is that there's this huge gap. I don't know if you can see this gap here. Can you see these gaps? This huge gap here. See that?
Yeah.
There's a huge gap there on the. This is on the hourly as well, so it's pretty good. I mean, that's how thick it is. Huge gap, and that's right on the 38.2. So if you're kind of selling anywhere here, providing it is the top, and I mean 4-hour Willy's at the top and all this stuff, but you know, who knows? Who knows? You know, stuff goes mental sometimes. But providing it is the top, I think it's highly likely it is. We've got a rising wedge. I mean, if they do pop out the top, they don't usually last for very long, but providing this is the top, then you know you will almost certainly be getting filled up down here. So that's what I wanted to point out, really.
All right, so you've pointed that out. Now the question is, right? If you put this trade on, boom, would you just hit the market there? I mean, I can't see what the bid is. Pull up your quote screen right there, and let's just see what the bid is.
What the here is 442. Yeah.
No, your quote screen. What's the current market?
Oh, 455.23.
All right. So the bid right now is 455. Is that what you're saying?
Yeah, 455. Yeah.
All right. Boom. You just sold one. Way to go. 455. You're filled.
Yeah.
All right. Now my question to you is, what are you going to get out at, and what is your uncle point to say I'm wrong and I'm going to give up?
Well, if I got out now, 455.23.
You just shorted. You were flat, and now you're short.
Yeah, so if I short 455.23 now, this would be my first stop, 38.2.
Would you have an open order sitting there? Would you sell part of it? Would you sell all of it?
I would have the open order sitting there, ready to catch any long needles, you know, that come down and penetrate into it. And what I do is if I do get hit on that on a long needle, you know, just a random big sell, as soon as it hits and I get filled, you know, if I got filled up like here, and it's just a long one, you know, that just comes down like that, you know, I'll just instantly put it to sell up here, and then look to get it again, you know, when the market comes down to kind of settle on it.
Right. So what I'm hearing is you'd have an open order to cover your short at that 38.2 fib. You'd also have an open order to buy at that 38.2 fib with an idea to sell on a counter trend rally back up top. Is that correct?
Yeah. Yeah. Exactly. Yeah.
So that's what 3 different orders. And let me ask you, how much sleep do you think you're going to get tonight?
Well, last night I went to bed at probably quarter past 3, and I mean, luckily I got a lie until about 8:30, 9 o'clock. Daddy, wake up, wake up, wake up, Daddy.
But you got 5 hours. Well, that's not bad.
Yeah, but you know, some nights, and Joseph has been there as well, you know, I have to just go to sleep on the sofa with the laptop open right next to me and the phone on price alert, because as soon as that gets hit, I want to instantly set the sell straight away, because counter trend.
So you don't? Do you have the ability to do AOCO orders?
No, not. I mean, there is. Somebody said there is that on Bitstamp, but I've never seen it myself. So I just set the price alarm and just wake up and do it. You know.
So isn't that interesting? So and we never talked about uncle points. So boom, you're short from 455, right? Well, that was our number, right? Mm-hmm. So at what point do you think would you start sweating on this? Are you 100% in on this trade? Are you? I've only put a quarter of my money in at this point, and I'll add to it. Or
I would start sweating on this trade at a hold above 470. Hourly close above 470 and hold, and I'd be really worried.
$25. So $25 is your uncle point, and what's that 38.2? I can't see what that's.
It's 444.
So interesting. So $10 of reward, $20 of potential risk. 25.
Yeah, but only because I mean, to me it's just any. I mean, I can't see it getting to 470. You know what I mean? I can only imagine it doing like some kind of crazy move. I mean, yeah, I just can't see it getting there. But if it was at 470,
let me ask you this, and I'm only doing this because I like playing the devil's advocate. if you see this chart pattern, and
Mhm.
actually this is kind of what I like about you, is you have incredibly good trader intuition. What do you think the percentage odds are that this trade goes in your favor and against you?
In my favor, probably 90%.
Wow.
Against 10%.
And so that is just something that's ingrained in your soul, eh?
I just can't
Oh,
see.
I
I mean,
like that. I like that. And you
yeah,
notice everybody who's listening, he didn't even pause there. He's just like, about 90%. Boom. So
yeah.
do the trade. I love that about you, Flipper. You're just awesome. Mwah, big kisses.
Thanks.
All right, so it's about 20 after 6 here. We were really privileged to have Dan here, so I'm just going to ask him in closing on this part sort of segment. After what you've heard today, Dan, any thoughts about trading psychology, trading plans, what we've talked about today that maybe you'd like people to hear? Let's see if he's still with us. Oh, there he is.
Yeah, I'm here. Psychology, I think, is a multifaceted subject. There are times when you try to second guess yourself, or you listen to other people, uh, and you listen to the news. These kind of things could be a big distraction, but we have a temptation to see if any of these things can help us anticipate or maybe clarify our viewpoint. So we often try to do that. My feeling is, and in fact, there was one particular professional fund manager, and I'm talking about people who are managing $500-600 million worth of fund. He was saying that in his trading room they've got no news terminal whatsoever, and nobody is allowed to consult any news media in the trading room.
Yeah.
Outside they can do what they want, but in the trading room, once they're in, the doors are locked. They've got no news terminal whatsoever. Now there are some others where they'll have Bloomberg terminal, staring at them from every corner.
Yeah.
So personally, I think from the chart that I have been posting for the Bitcoin very extensively, I must say, I am oblivious of really what's happening in the Bitcoin world. As many of you know, when you talk about such an event, or this happened or that happened, I haven't got foggiest of idea what you're talking about. And yet, maybe my understanding about Bitcoin world is probably not to the level many of you are at, and yet purely from technical point of view, I have been, I think, reasonably accurate with regard to general expectation of the trend and general extent of the movement. And I'm not talking about predicting within 10 and 15 or 20 or $50 move. I'm talking about general, bigger picture map. And I haven't wavered from it. So, if I see a pattern clear, then I do not want to listen to anybody. I don't care how good the argument is.
Yeah, what I find fascinating, and I'll let you finish that thought, but I just thought to throw this in. Those in the Bitcoin world, that are sort of fundamental, Bitcoin's going to change the world kind of people, they actually detest the fact that Bitcoin follows harmonic patterns so well. And I mean, what's ironic about harmonic patterns is that basically we're sort of getting a sneak peek at how the matrix works, and what it literally means is that Bitcoin as an asset obeys the laws of asset money flow sort of movement, just like every other asset, and it's actually no different. And I find that fascinating. And basically what I'm hearing from you, Dan, is basically that's right. I mean, what's tragic about the world is that the public wants to know what the reason is that something happened. We as technicians and really as speculators and capitalists in the market looking simply for capital gain, We don't care what the reason is. We just want to see our projection hit, right? Would you agree, Dan?
Yeah, I would. And I think the common factor between Bitcoin asset and any other risk asset is the human being.
Yep.
And these human being, individual characters might be different, and you probably might not be able to guess what he's thinking or what he's planning or what his next move might be. But apparently, the whole insurance world, for example, know uh, by studying broad-based data of how people react, what they're likely to do. And so that we actually see in the chart formation, because people decide what action they want to take, whether it is informed or uninformed or considered by technical analysis or fundamental analysis. They make decision, they make commitment. They could be right, they could be wrong, but the fact that each price bar is a result of everybody's expression of what they think, what is the sum total of their view.
Yep.
And because of that, I think the technical analysis work just as well on Bitcoin as it does in any other. I'd only say that at this moment in time, Bitcoin could be something that is like a hyperactive child when you compare with general other assets. So it tends to be more volatile, it tends to be more spiky, but it still behaves the same way that you see other assets behaving.
Well, I'm fearful, and I hear Landon wants to say something, but I was just going to dovetail on that, Dan. I'm fearful that we've actually moved out of childhood and now we're into those dreaded teenage years. But I understand exactly what you're saying, Dan, because what is interesting is I have a long history of trading penny stocks. And new issue penny stocks can move up these 10, 20, 30-fold gains like we've seen Bitcoin do in their infancy. So, yeah, I totally agree with that. Landon, I did hear that you wanted to comment, so the stage is yours, sir.
Oh, no, I actually think that TA works better than your average, because really technical analysis is really based on studying the patterns which are a result of human emotion. And considering what we know from Bitcoin and the Bitcoin community, there are far fewer professional technicians in the Bitcoin trading realm. And really the purpose of speculators and technicians in a marketplace is to basically bring smooth out the rough edges and bring some reason to the madness. And really, since there are so few experienced ones in the Bitcoin community, and so many inexperienced emotional traders in the Bitcoin community, I think technical analysis works far better than your average product to trade for.
Well, I think that goes up and down. I think we just forced a whole bunch of market participants out of the market, and I think a lot of those participants were trading Bitcoin technically, and it's actually interesting to see how the volatility is kind of being squeezed out of the market here now that the sort of the mainland Chinese gambler is gone. And I think that's probably like the tide, ebb and flow, ebb and flow. So I probably would agree with you, in that infancy, how many people are actually really paying attention. But at the same time, what I find interesting is if you look at the higher time frames, you can actually see that price is basically coming into and has come into an area where institutions generally like to take a shot on the long side. So not a really big surprise that we're at least seeing some demand down here. All right, so it is 6:30 now, and I think we've had a really lively debate. I thank you very much, Dan, for participating with us tonight. It's been excellent having you on board. And of course, Landon, always appreciate your 2 cents. and your perspective, and also we had a special appearance by Andre tonight. So thanks again, everybody there. We do have one participant in the lounge who's been a bit quiet tonight. So Zin, if you do have a question or a comment, feel free to chime in. I think at this point, usually in our schedule, and I kind of like to keep us on task. I don't want these shows to go too long. At this point, usually we open up the lounge to questions and answers, and I'll pop over to the YouTube page to see how we're doing there. Looks like we have a few viewers here, so actually great to see. So what I would like to do, Landon, if you maybe just want to, since this is our show, I'm going to give you a couple minutes to talk a little bit about anything you want to talk about. That's sort of your raison d'etre here. And I'm just going to pop over to the YouTube page and see whether I can goad some questions out of that audience. I don't know, Dan, do you have any questions of us or Andre, or of one of us that are in the lounge? Feel free to ask or feel free to chime in. And I suppose you could officially say we're in our Q&A period right now. So I'm not going to do the lead-in because that's a bit tacky. So did we have a YouTube, let's see, Flibber, can you post the YouTube page to Reddit? I don't know what that is. Let's see what Zin says. I'm really happy to listen to you guys since I'm in the strong learning period. At the moment, I'm a bit tired for talking serious stuff since it's 3:30 a.m. here in Berlin. That's interesting. So we have the great nation of Germany represented tonight in the lounge. Where are you, Dan? Are you in North America here, or are you overseas? Maybe I'll ask him another time. Yeah, Andre, you're over in the UK, correct?
That's correct.
Oh, Dan, you in the UK too?
We both are.
Yeah, no, I'm in UK, London.
Oh, okay. And Landon, where are you?
Over here in the States.
That's a pretty
Midwest.
big. I'm here in on the wet coast, Vancouver, British Columbia, Canada. Where are you, Landon?
Over in Arkansas.
Arkansas. Isn't that interesting?
Yeah, and in fact, if there's anywhere more beautiful to me that I would rather move, it actually is Canada. And I like the cold weather, so it works perfect.
Well, what's interesting about Canada is that 95% of this country, it is bloody awful in the wintertime. But there's this little pocket here in the lower mainland of British Columbia that we just are enveloped by the Pacific Ocean. So we don't get a lot of snow right here. But that means that the real estate, of course, here is through the roof. There's like one 2-mile stretch in one part of Vancouver that's the most expensive real estate in the whole country. So go figure that one out. All right, I'm going to pop over to YouTube. So you have the responsibility just to keep the conversation up here while I read that stuff over there. Okay, Landon?
Sure. And let's see. I was going to go over here a little bit, kind of go in more in depth of how I keep my cool, and also I've never really explained thoroughly my trading plan to you, Brian. But I would say here is my screen pulled up, and I got the screen share on. Looks like it. But I'd say, I mean, if you could put a label on it, I don't know what you think, Flipper. You'd say contrarian momentum trader, I guess. Something along those lines.
Probably that sounds about right. Yeah.
Yeah.
I'd say you're a swing trader.
Well, I mean, I
don't know if you heard me.
Yeah.
I think you're a swing trader.
Oh, definitely. But I mean, usually for the swing traders, they're usually not trying to get the absolute bottom and absolute tops, though, right? At least that was my impression. But anyway,
Well, you just what I mean by that is you're playing the momentum swings between significant levels.
Mm-hmm.
So, I don't think you're obsessed with picking the exact bottoms and tops. And from what I heard from you, you're like, slow down, just go slowly. The turns will make them self-evident.
Mm-hmm.
So that's sort of what I heard from you, is that basically you want some anecdotal evidence that the market is turning, and then you'll
Mm-hmm.
take the other direction. Is that correct?
Yeah, absolutely.
That's a swing trade.
All right, well that works. So there's a lot of things that I do, lots before making a trade. Let's see, I've got the day range on here just to show the natural progression. I've got the it's set to logarithmic, because really with when you're looking at scales over an extended period of time from anywhere from 120 to 1100, you're really going to need that to be able to get a sense of it in the chart. But I've got my my long-term bullish trend line set in, and I've got my mid-term bearish trend line in. So I've got a long-term bull, mid-term bear, and then I've got and then I will usually trade similar to Flipper with that 4-hour range. And let's break that down here a little bit. And as you can see, as I'm coming in here, I mean, we're really getting into the thick of that wedge, and a lot of what everybody's been talking about. And you can kind of see my trades back and forth the last few weeks here. Now, let me zoom in here. So I had this OTE long spot set in about 2 weeks ago, as well as this OTE short spot set in 2 weeks ago, and I usually try to make a decent amount of range, just depending on where the support lines are drawn. As you can see, I've got a support line drawn from the last bottom, and a resistance line from the last top. So I've got that range I'm playing with going sideways. I've also got the descending motion that seems to be rallying up from here. We now have the double bottom after hitting the OTE long spot. And then we're coming also to where we broke short-term trend, and now we're looking to more challenge the that former resistance line and then the midterm trend line. So really, as far as the trend line side goes, the bulls have really only surpassed one level of resistance for me in my mind. Similarly, on the indicators, my Stotch is consistently high for this, and I really usually only use that indicator for more quick action, and more of a rubber band sort of indicator. But I've got the MACD going on here. There's not really much to tell for me. I mean, it looks bearish, but it's not too overly disconcerting for me on the bear side. The real big thing I see here is coming up into this extremely strong resistance zone, simultaneously matched up with the 4-hour extended time frame of the moving average of Willy and then RSI topping out at the same time. So that's really got me into a point where, I tell myself, well, I would absolutely never go long here. I mean, even if it did, basically it would have to, within this price action, it would have to break the 475 level and then come back down for me to consider relonging again. And for me, if it did that, I would probably hold that long position for several months, considering that that's the midterm trend line bearing down. And of course, if you look on the longer time frames with everything, you can see a lot of that momentum waning. I mean, we've already seen go down to the week, and you can see the MACD starting to turn over. You can see this, and just within the chart itself, you can see that momentum on the. Oh, okay. Oh, don't need that up there. You can see the momentum is really just dying off for the bears, all in general. So we're, for me, last week say, we're gonna see a retest of let me go back here. We're going to see a retest of that 340 level, or we're going to see it down. I saw some charts that said we're going to see it down in the 200s and the 250s. I'm just like, come on, guys. I mean, there's really no precedent for that. Even with I say always want to go with the trend instead of going against it. And what I've been telling everybody for the last 6 months is, this is still a bear market. This is still a bear market. In reality, it's not. Long term, it's a bull market. It's just within that particular time frame. You got your long term, your midterm, your short term. Within that particular time frame, the midterm, we are still in a bear market. That trend is completely undefeated. So eventually, like all trends, either the midterm or long term will win out, and usually your long term trends are stronger than your midterm trends, just like your short term, your midterm trends are stronger than your short term trends. So short term trends are easily broken, midterm trends not as much, and long term ones are, well, really a big pain to really tackle, which makes perfect sense. Coming down after seeing, the market basically beat down over and over. You see this 400 level, 400 level, 340 level, and so on. I mean, there's just been so much action here, everything getting bought up, and with a considerable amount of bad news. And you take a step back and you look at all those things, and what does that tell you really for a longer-term investor? And really, to me, what that says is that, well, this market is incredibly resilient here, and which also adds more incentive for people to start tacking on and tacking on and tacking on. And the more support that gains, the more pressure it is to go up and break that existing trend, which is exactly what I think we're seeing here. Now, here we go. And get a little action, a little price action going on here. Good. A short 458. So this is looking nice.
I mean, I appreciate what you're saying here, Landon, and opinion is awesome. That's great. Question is here. I'm hearing actually two kind of conflicting messages. I heard you sort of talk about the bullish case. But then right at the end here, you just said, price action's negative. Oh, that's good. I'm short. So how do the two of those come together?
Because I'm very strict at differentiating my time frames. So that puts things into perspective for me. If I know that I'm in a bull market and I short, then I need to be shorting in such a way that I'm fully prepared to get out quickly. And, it's not something that I'm going to set and forget. Similar to Flipper, my target on this is also around the 440 range. So on the longer time frames, I'm incredibly bullish. And for 6 months, I've been bearish, and what I'm seeing here on a very consistent basis through all these indicators, looking at all these charts, is that not only is price action getting soaked up in this range and holding on a pretty consistent basis, but all that momentum all that bearish momentum is dying essentially. Now, On the short-term side, which is what I'm trading on currently, it's coming up to we've had that double bottom already. We've got the indicators that are through the roof. I wouldn't say as high as they could be, but I mean they're relatively high enough for me. And you're also coming up to that key resistance level. So really, what that tells me, and also adds to the effort of me being rather bullish, wants basically one more last test, which I completely agree with Dan on the ignoring news. Because it can be quite a distraction. But knowing the news that is going on in the background, that coinciding with China's influence on the market slowly dying off. I don't know if you saw the recent article where OKCoin, Huobi, and BTC China are basically setting up the coalition to basically bend a knee to the Chinese government and basically say, look, hey, we want to be here and do whatever we need to do directly with you to make this work. And I'm just kind of paraphrasing here. And one of the things, yeah, and
slush funds.
One of the efforts, one of the efforts that they were making to kind of, what was it? Lend the olive branch, so to speak, was that they were.
I don't mean to cut in, but that's the sad part about this, right? Is if these exchanges throw enough money at enough bureaucrats, they'll get reinstated. That's all it really comes down to, in my opinion. But that's here or there.
Well, this one was more of a regulatory measure. They were basically saying, look, we understand your concerns, and we're going to do more actively right now to self-regulate. And one of the things that they're doing is they are eliminating margin trading in China. All the exchanges for themselves, and at the same time they're also raising fees. So that's one of the big aspects of the Chinese market that we know. It's one of the reasons we see all this volume just pumping over, and it's a market incentive even for Western traders who have a lot if you can trade in Huobi, why not? 0% fees. You got margin trading along with that. I mean, it's a ridiculous incentive to and so much liquidity because of it. There's so much incentive for big whales to come out and trade on Huobi or say OKCoin. Now the problem is when bad news hits in China. The market is centered around these China exchanges for the sole reasons, even the Western side of it. And, that's why you have that imbalance. Even the Western side of it, because of all of these incentives. So instead of having a 10-point drop or a 20-point drop, you see like a 50, 60-point drop because of the market overreaction, margin positions, because you have those big whales and those big traders and everything else. So, and you have less liquidity in the Western exchanges. So I think, and it's such perfect timing for them to be doing this with all the bearish momentum coming down onto the market, and basically China's influence is slowly dying off, and this is essentially going to be one of the biggest nails in the coffin to date. Is a lot of those traders are going to start moving back to these Western exchanges. Bitfinex is going to be a big one, especially for ones that for traders that trade on margin a lot. So, and you're going to see a lot more Western dominance in this market, simultaneously coinciding with the fact that the market bearish momentum is slowed down. We're running up against the long-term bullish trend line, and this wedge, and simultaneously you have regulated Western exchanges, regulated exchanges in the United States. So I mean, it's just kind of all cultivating for the fundamental perspective as well as the technical analysis perspective.
It sounds good, Landon.
Bullish.
I don't mean to cut you off here. I apologize.
No, it's all right.
What I would love and this is a little tisk tisk on your part, but I would love for you to come out for the Bitcoin show that we specifically do on Wednesdays, and you can talk Bitcoin into the ground. We're just about running out of time here. So there were a couple questions in the lounge, and now that we have Dan here, I wouldn't mind just getting his 2 cents. So 2 questions that we have posed. The first is to do with money management, and it basically, and I'd love to, if Dan, if you're here, I'd love to hear your thoughts. The question was posed, I guess, and the way I would ask it is, if you're going to trade Bitcoin and you've got, let's say a portfolio of $100,000, that's all your sort of net worth, what percentage of that would you yourself allocate to sort of the Bitcoin space? And then of that percentage, let's say I've decided I'm going to risk 5% of my net worth, let's say 5,000, just a nice simple number. How much of that 5,000 would I risk on any one particular trade? So there's 2 questions that kind of dovetail. Somebody asked about the 3% threshold. Was that 3% of that entire $100,000 your entire net worth? Or was that 3% of the money that you'd allocate to this sort of Bitcoin fund that you've got going? So Dan, if you're with us, I'd love to hear your thoughts.
Okay, well, on that particular situation, I would obviously look at the price action, but at this moment in time, I would not be looking to buy Bitcoin until it drops to 350, 360. Then I would start looking actively.
Okay, so we don't have to talk about specific levels.
No, but I'm just using that as a point.
This was a question about, and from what I understand, Bitcoin isn't in a buying window for you right now, and that's perfectly fine.
No.
This is really more a question about, trading plans, psychology, building, approaching this from a professional perspective.
Yeah, I understand. So assuming, say, for example, if it came to my zone, out of the 5,000, we are talking about 5%. In general,
I don't know whether that's a real number or not.
No, I'm just using that as an example because you mentioned that. So if I had a portfolio of 100,000, and I would be saying in general, I would not want to take a risk of more than 2%, then ideally what I would do is I would probably split that at least in 2 or 3 different parcels of trade. So my initial position I would enter, and then if the price confirms in my direction, then I would enter a second position. But ideally, I would not commit more than 2% of the total risk. That means if I was stopped out, I would not suffer more than $2,000 loss.
Okay.
Now, if the position works out in my favor and I get to the point where I can lock in with some profit, then I would look for the next retracement to add another position equally with another 2%. So in other words, my first one is already locked in with profits. I cannot lose that anymore. And then hopefully, as you see a price continue higher and then make another reasonable retracement, then at that level, I would be looking to add another percent. I would scale in. So I would finish up with a larger position, but my overall risk, my original capital, would still be 2,000.
Oh, interesting.
And on a longer trade, I could finish up with a sizable position, but my risk is no more than 2,000 on my original position, which is of the opening. So in other words, say if a Bitcoin ran from where I think it will to say $700, then you're talking about good $300 or $400 move. So in that, I will get opportunities to add positions, and I could finish up with a sizable position by the time we get to the top, and that's scaling out. But I would at each time I would not have more than 2% risk at any one time.
Ah, I like that strategy, and I'm glad that question was answered or asked to begin with, and actually I'm thankful that you answered that, because that's a very interesting perspective. In essence, if Bitcoin just kept going up and up and up and up and giving you more and more opportunities to get in, you're not averse to adding additional positions, just as long as the first positions that you have basically either have built-in profit stops, or at worst you walk away from those positions at scratch.
Correct.
Is that correct?
Yeah.
Yeah. Well, very interesting. I like that perspective. Thank you very much. I'm glad. And let's see if I can find who that was that answered or asked that question. Then I'll pass on the kudos to you. So that was from Jen McWynn. So thank you, Jen, for answering that. That's an interesting question and an even more interesting answer. All right, so we're coming up on 7 o'clock here, and Landon now knows that he has to come to the Wednesday show. And Landon, I'll give you a nice 15, 20-minute window through that show to tell us exactly what you think's going on in Bitcoin land. That's perfectly fine. And I do appreciate you giving us your thoughts tonight on the trade and setups and stuff like that.
Oh, it started on the setups and then it went off on the tangent.
That's the way these things go. And half of my job is, of course, the moderation.
But that really is kind of a confirmation for me, though. An added confirmation for my setup. I've got all of these TA factors, and I've got the fundamental factors pulling in. So it ties into kind of my situational awareness to the trade, so I know to get out quickly.
Right, and and here's the irony of it all, right? Is that technical analysis for the layman is actually a relatively new thing. When I first got involved in this business, we used to get our price charts in the mail, and they would come like once a month. So can you imagine trying to do the fib calculations that we do using just a slide ruler? It's quite difficult. So what's interesting is that, prior to the advent of serious technical analysis, and, we're blessed with something like a tradingview.com. I mean, frankly, this is just a gift from the heavens. And it just would not have been, a price chart that you see on your screen like right now, it would just be beyond somebody for like 20, 30 years ago. And what would end up happening is, we used to say things like follow the chalk marks. I used to have a couple very older clients who basically started trading in the 1920s, and back then basically people just watched the boys up on the boards just changing prices, and they used chalk, and that's where that term came from. It was just basically a chalkboard. So
we're not talking about bucket shops, are we?
No. I mean, these were exchanges. I mean, the Vancouver Stock Exchange. The industry itself has evolved dramatically over the years, but that's here and there. The point that I would just make is that there is everything acceptable to using human emotion. I often hear you use the term FUD, right? Well, that in essence could be one of your trading criteria. Where's my little course? 3 independent reasons for purchasing an asset or selling an asset. Is you actually have an intuitive instinct as to when the public is in there buying, and so as a result, you end up taking the opposite side of the trade. So it doesn't necessarily have to be technical based. The point here is that it's a repetitive process, and you basically do the same things over and over and over again, and you have sort of an intuitive belief in your setup rules criteria. That's the key takeaway here. And from all our panelists, I hear that basic same message. And one thing that I heard from somebody recently who was giving me some feedback, they said, well, Brian, you do exactly the same thing every single time I see you look at a price chart. And so that's good, because that's what you want to have built into your sort of trading acumen, is that when you consider doing a trade, it's the same reasons every single time. All right, so I suppose in closing here, and actually we've gone 2 hours, so it looks like we had a nice full show. I think all our viewers got good value for what they heard tonight. We're going to finish off with the last question that I saw in the lounge, and this is just a fun sort of out in the park, but actually we have 3 very active members, and I'll throw my 2 cents in. But just in 1 sentence or less, where do you see Bitcoin topping out? So we'll start with Andre. 1 sentence or less, where do you think the top is on Bitcoin?
What time period?
I don't know,
Okay.
whatever the top is. This question was asked by
Okay.
Yu Chu. Ya Chu. I hope I'm pronouncing that right. Go ahead, Andre. What's your call?
Probably. It will never stop. It'll be like gold. It will never stop.
All right. So basically, the
Infinite.
sky's the limit, and pullbacks are buying opportunities.
Yeah.
All right, Dan. You got a thought on this? 1 sentence or less. Where do you think this silly Bitcoin's going to end up topping out at? Well, I don't know whether Dan's with us or not. Can you guys hear him?
Yeah,
Nope.
I would say that
Oh, there he is.
once we
Alright,
have the low, I would expect at least a retest of the November high, or maybe slightly exceeding that before we get another significant retracement.
All right, so you're calling a top just north of $1,200, somewhere in that neighborhood?
Yeah, that's subject to the
Yep.
current low being the significant low, and the price action that follows after that is impulsive. Otherwise, I have already published a chart saying that we might go back to 700 and do another deep retracement, which would probably go below 340 subsequently.
All right, was that 1 sentence? I don't know. I'm just playing with you, Dan. Thank you very much for your thoughts. So we've got 2 panelists. Andre, sky's the limit. Dan, a little bit tempered enthusiasm. And really, you know, I can understand what you're saying. Either we're stuck in a trading range where we probably run out of steam on a retracement of this sell-off to test those old highs. Optimistic scenario, if I'm hearing from Dan correctly, is we go up and kiss those old highs and maybe even spend some time in new territory before we need to take a pause. And last but not least, our co-host here, Landon, you get the last word. Where's Bitcoin going?
All right, I'm going to say that we're going to see $4,000 to $5,000 Bitcoin within the next 6 months.
Wow! Now there is a
Whoa.
projection. Kaboom!
Whoa.
Yep.
Steady on. Put those horns away.
Well, hey, you know, and that's the best part about the market, is that everybody's entitled to an opinion. That's the #1 reason why communism failed, and that's the beautiful part about the capitalist market, is that everybody's entitled to opinion, and somebody's going to be right. So, for all those that are bullish out in Bitcoin land, let's give a cheer for Landon's bold prediction. Where's our sound effect board here? Who's got the
Note
cheer
you said
effect?
that, and I'm short, by the way. I'm short right now.
Well, so I don't know whether you're eating or cooking. Within 6 months too, so obviously the short is not one of those long-term buy and hold strategies.
No.
Where's our? All right, so $4,000 within 6 months gets one of these. All right, everybody. That's basically about 2 hours. I think we covered a lot of territory tonight. I really like the idea of us talking a bit about trading psychology and trading plans. I think it's a real benefit for the new people to trading because they just don't realize that professionals who play this game come at this from a very serious approach. We have specific risk levels in mind. We have specific targets in mind whenever we put on any of these trades. And you'll notice, hopefully, and I think that's the resounding theme, is that every single one of our resident traders, they have a very methodical approach when it comes to even considering putting on a trading idea. I want to thank all our participants. Thank you very much, Andre. Thank you especially for Dan. Thank you very much, our special forum guest here tonight, Dan. And thank you, Landon, for always making this a fun adventure. I think we make a pretty good team. We seem to complement each other really well. I want to thank, of course, YouTube and Google Hangouts for providing this service. And I want to thank TradingView for giving us the awesome charts and quote services that we enjoy. And I suppose give a special shout out to Landon again. You have a great week, Landon. I hope you're set up well and you can take advantage of these opportunities, sir.
Thank you.
That's your cue to say something.
Right. Thank you.
All right. Andre, thank you, sir, for coming out.
Nice to be here. Thanks.
And Dan, thank you very much for your thoughts. Much appreciated. I'm sure everybody out in YouTube land's going to be a little bit wiser after listening to you. All right, Dan still watching us. All right, so only thing left to do, DJ, let's get on our dance shoes and let's dance our way out of here. Have a good night, everybody. See you next week.